Jeff Benson coming to you from Jacksonville, Florida. I really appreciate you taking a little bit of time out of your day today to listen to our story. And basically, I was sitting there thinking about what we talk about today, and I'm going to do my best to keep this on track. So really what we're going to do is I'm going to give you examples, real life examples of things that have happened to me as an underwriting manager and a marketing manager of a program. And these are real life examples of things that have happened to agents during the course of natural catastrophes. So we're going to talk about those kind of in order. And I think you'll find it very useful. And some of this you'll say, well, that seems like common sense, but well, as I get into some of my stories, you'll see how nerve-wracking this business can be. And I do have a lot of feel for the agents because you're the guys on the front line, and it's your reputation at stake, and many times your errors and omissions at stake. And so I want to do my best to help you out. So we're here to help you in any way we can. So we'll talk about this probably for the next 20 minutes or so, and then open it up for questions. And so I do appreciate your participation. So hopefully everybody's on and can hear all right, and let's get this show on the road. Flood. So we all know about floods. Happens a lot of times. Floods in the Midwest. We've had some floods in other parts of the country. So we're going to talk about that a little bit. So what we hear a lot of times is, you know, the mortgage companies will require flood insurance depending on the flood zone that you're in. But many times, if you're in a flood zone X or some other one of the other less hazardous zones, the mortgage company doesn't require flood. So what we've seen over the last, I will say 4 or 5 years, are parts of the country that are flooding that have never flooded before. So we kind of laugh about the once in 500-year flood that happens every year now. So just because the mortgage company doesn't require it, a little word of wisdom to you is be the agent that always offers it. I would always offer the flood, and you know, make sure that you know, you have a proof that you offered it to them, because sometimes they have selective memory. We've had many instances where the insured will come back and say, yeah, you never mentioned that I needed flood. I would have bought it if you'd have mentioned it. So once again, you can't be too careful. We do provide some flood on our builder's risk as an optional coverage. You have to ask us for it. Kind of depends on where it's at and the limit you're looking for. But sometimes a standalone flood policy is the better deal. So we've had many of these instances where we get the call after the flood, and those are not good calls. So we definitely had one. We had one last year in North Carolina when the storm was coming. And a lot of times the tropical storm, you think of the wind, but it's really the flooding, inland flooding, that creates a lot of problem. We had a very high valued home that we had offered flood. The agent had offered flood on it, and they had turned it down. And 2-story building, and it flooded up to the 2nd story. So it was 95% complete, a lot of value sitting there, and there was no coverage. So just to scare you a little bit, but these are things that do happen every time. Oops, went one too far. Hang with me here. Let's go previous. Once again, this is just another example, but we've seen a lot of these where you know, you do your best to tell the insured this really could happen, you know, and they're going to say, well, you know, my family's lived here for generations. It's never flooded where this building is. I don't think I need it. I can't tell you enough is to document your conversations, and I put it in the proposal that you offered the flood. Have them check a box that says, I don't want the flood, because they'll hear something different when the flood starts coming. And the worst feeling of all, even from an insured standpoint, if I'm the owner of a structure or you know, if I was the builder being involved in this, the river's rising, it's coming close to the street, and you're thinking, did I place that flood coverage? Did I tell them I wanted it? So then they call the agent and he says, no, you turned it down. Don't you remember that? These are very, very uncomfortable conversations. So just keep in mind, happens all the time. I had one a couple years ago. This is a good story. It is very high valued for our program because we only go up to so much. And we had written this new museum being built, many, many millions of dollars of being built. And it was, I want to say 85 to 90% complete. It's a 2-year project. It was almost over. It was in not in a flood zone, never flooded in the history of, you know, recorded history. And all of a sudden, the river, which was a mile away, started to flood. This was last year. And being the underwriter on this account, this has made the national news. They kept showing this museum. They kept showing the river every day. I was watching the news. I was very, very excited, to say the least. So the river was rising. And by the way, we had placed the flood. We'd written the flood, and everything was done right. We rated it correctly. It was on the form, plenty of coverage. I'm not exaggerating. On the local news, they were saying we think the new museum is going to flood. The river now is within 3 feet of the ground floor of the museum. And don't know what happened. Crossed my fingers. The flood started to recede. The river receded. And the only thing that washed away was some of the landscaping. So needless to say, as an underwriter on the account, I was very, very happy. But I will say the agent had done their job, had done a good job of selling the potential of flood, even though it was not in a flood zone. So even these large commercial projects, sometimes you should always offer the flood, put it that way. Maybe that's the moral of the whole story. Make sure you talk about it and offer it. Because in many of these natural disasters we talk about today, flood is the thing that does the most damage. And that's been my experience as an underwriter. Tropical storms or hurricanes. And this just happened within the last couple of years. And this was one of the more nerve-wracking examples that I've ever heard. So it was a Thursday afternoon. It was late in the afternoon and my phone rang. It was one of my favorite agents that does a lot of business with us. And they said, Jeff, I was just looking over one of my files, and it looks like that high value home that we placed with you, I forgot to tell you to extend it. So I was like, ooh. So we pulled the file, I'm looking at it, and I'm like, yeah, we offered the extension to you last week and you never got back to us. You never told us you wanted it. So the coverage is lapsed. There's no coverage. And right when I told him that, I could almost feel the air getting sucked out of the conversation. He was like, Jeff, you don't understand. This is my largest commercial client, and this is his home that he's having built. And I write a lot of business with this guy, even more than this one high-valued home builder's risk. He goes, you got to help me out here, buddy. And I'm like, just as he did that, I happen to have the weather on, and the storm that we're talking about, and those of you will remember which one it is, had just been categorized as a Category 5 hurricane. And they had changed the direction. It was heading directly for this house. I mean, if you could have drawn a straight line from the eye of this hurricane to this house, and it was heading right there. And the agent's begging me and is pleading with me, and I'm like, I really, really felt bad, but I said, this, it's out of my hands. The carrier has frozen binding authority. I don't have the authority. I said, I guess you could try to go to the CEO of the national company, but it's not going to happen. They're not going to place coverage now. So the story goes, I even had a sleepless night all night, Thursday night into Friday. The storm was there. And then whatever happened on Friday, the storm decided to take a 90-degree turn, and it went right up the coast of Florida, didn't do any damage at all to the home. And Monday, we extended the coverage. Everything was in place. But the moral of the whole story was, these builders risk have an expiration date. You need to get a hold of your underwriter, either renew it or ask for an extension. Can't stress that enough, do not wait till the storm is coming. It's too late then. That was a real life example. I did feel bad for that agent. Probably took a couple years off his life too. So here's another one. This happened just last year too. So I get a call from an agent, and he goes, yeah, Jeff, I happen to be looking at this policy we wrote with you about 11 months ago, and I realized that it's underinsured. We really made a mistake. I can't remember the exact values. Let's just say it should have been $2 million, and I only wrote it for $1 million. I really need to increase this to another $1 million in coverage. Kind of the same scenario. I had to say, the storm's too close. We can't increase the values. Once again, he was like, well, if something happens, we're gonna have a lot of trouble. I'm like, yeah, it's underinsured. Anyway, another one worked out. The storm took a turn, didn't do any damage at all. So the next week we increased the value of where it should have been. So insurance to value. I know I'm always preaching that, but it's so critical to this labor, material, overhead, and profit if they want it. You can add soft cost and delay in completion and other things, but that labor material overhead, basically the selling price of the structure minus the land, that's what it needs to be insured for. Don't try to scrimp on the value just to save a few dollars of premium. And the last thing I want to touch on too, so a lot of times if you go all the way back, I'm dating myself now, but to a little storm called Katrina, there was a lot of discussion about the concurrent causation, the approximate cause of the loss. Was it storm surge? Was it wind? Was it wind-driven water? Was it just water? A lot of questions came out of that, and they're still there today. So the safest bet of all is to make sure you read your form, the forms that you use, the main form, see what's covered and not covered. And then second of all, if it's in harm's way at all, has the potential to be, you need to add flood coverage. It just makes sense to have a separate flood policy in my mind, or adequate limits of flood. Because what you do in that case, it kind of removes this concurrent causation. You need to make sure they understand their wind deductibles, make sure they understand the coverage that's in place. But that way you have the wind covered, you have the flood covered, you have deductibles the insured can live with. All this needs to be done well in advance of the storm, well in advance of the tropical season. That's why we're talking about this now. It's not that far off. So once again, these are things that happen every year, and that's why I'm just trying to help you guys out. We've had some tornadoes in the last year or so, and I can tell you some stories. And some of those of you that are out there that are in Tornado Alley, in Kansas, Oklahoma, into Missouri. I grew up in Illinois. You're kind of used to tornadoes, right? These tornadoes come every year. I'm not saying you get used to them, but you do know that's the potential. But what we're seeing now, and I am not a predictive modeling expert, but they said the convective wind currents have changed, and we're starting to see more tornadic activity in the Midwest, as far north as Minnesota. So we're starting to see tornadoes, a high number of tornadoes in places that never had them. Northern Alabama, Tennessee, places like that. So just to give you an example, we had a high valued home insured in Dallas, Texas. And last year, the tornado came down out of the blue. I have a friend that lives in Fort Worth, and he said it was a nice day. Nothing really, didn't think anything was going to happen. And the tornado came out of nowhere and landed right on top of the house we insured and did a lot of damage, pretty much blew it to pieces. And then lifted up and went over and did some damage somewhere else. Blew apart a Home Depot. So these things are very, very destructive. And it was in a part of North Dallas that just doesn't have tornado activity. I mean, they never had one. So we're starting to see more of this. So the moral of this story is you need to tell people these stories so they make sure that they understand that it is a possibility. And we all know what happened in Nashville not too long ago. We do write a lot of business there. And that went through some of the older parts of Nashville that had been there for years and never had a tornado like that. So in your mind, you think, tornadoes, maybe Kansas, out on the plains somewhere, they hit the trailer park, they don't hit the areas that we're talking about. No, I mean, sometimes they hit commercial buildings. We had one that blew the roof off of a Walmart. I can give you lots of examples of these tornadoes that are doing a lot of damage to even well-built buildings. And so I cannot stress enough. And then once again, what I'm saying is just make sure that people are aware that this is a distinct possibility. Make sure that you have the adequate values insured. The deductibles are in place, the ones that your insureds are comfortable with. And then add any optional coverages you think they're going to need. Delay in completion and things of that nature. So, I mean, these things happen. Hopefully I'm getting your attention now. And then this is what I was just saying. Basically, I guess I just got ahead of myself a little bit, but the tornadoes are occurring in places they've never had before, and they're occurring at a more regular interval. You're going to start seeing, we're starting to see mandatory wind deductibles in parts of the Midwest that never had that before. I've been talking to, I don't do homeowners. I'm not a personal lines guy, but I've been talking to some of my personal lines friends, and a lot of the carriers are adding mandatory wind deductibles all over the country now because of these tornadoes. So the days of them only being either offshoots of tropical storms or Tornado Alley in the Midwest, I think are over. We're now going to see tornadoes all over the United States. Earthquake, just want to touch on that for a minute. I haven't had a lot of earthquake losses, thank goodness. But one thing that I've noticed, and we'll talk about that in a minute, is this deductible change. A lot of times when you write earthquake, the people are thinking it's the AOP deductible of $1,000, $5,000. And many times, depending on the earthquake zone it is, you might have a $25,000 deductible or even higher. So just make sure they understand that. So when the ground moves one day and you have damage, you can say, here, I showed you that deductible is a lot higher on earthquake. And the other thing, I think I put another slide in here. A lot of times earth movement is not covered in the standard forms. In order to get true earth movement coverage, you need a standalone earthquake policy, something to consider. And I kind of go back to that. I mean, if you really want to be fully covered, the best way to do it is to have a standard form builder's risk, add the flood policy, and add an earthquake policy. Then you're covered. So I know it might be a little expensive sometimes, but depending on where you're located in the country, I think these things are critical. And like I said, maybe you present it very well and the insurer decides, I've never had an earthquake, never heard of one in this area, so I don't need earthquake. Okay, well, you pointed it out. So, and these are examples. I've always thought the best way to sell this stuff, and you guys are experts at this, but I give them real life examples. Everything I told you today are things that I've experienced as an underwriter or a marketing person on that side of the house. And, I've been the one that had to deliver the message to the agent, and then the agent had to deliver it to the insured. And these are never good messages after the claim has occurred. That's all I can tell you. So it is kind of interesting when you have a big claim and everything's properly covered and you deliver the message as an underwriter. I'm like, oh man. But then I sit back and I think to myself, I did my job. The agent did their job. I did my job. We had it properly covered. And that was the case in Dallas with the tornado. I was a little upset. It's a big claim on the book of business, makes us look a little bad, but even from an underwriting standpoint, it was a good risk. I'd write it again today. So the underwriters did their job, the agent did their job, and the builder was reimbursed, made whole again. So we move on. So there are good stories to these things too. Let's see. The last thing I'm going to talk about, and I was going to not even bring it up today, and I said, well, it'd be kind of a shame to not at least mention it. And this is COVID-19. So all I'm going to say about this is we don't have any answers yet. All we have is questions. And I know you all have read the same thing I've read about the time element exposures, which are unbelievable. And I've been reading about this directors and officers, and everybody's going to be suing everybody. We know that's going to happen. So probably in the future, let's say by next year, maybe we'll do a webinar on the results of what happened to all of this. But I will say this, if I was you, I'd be reading those policies and looking at how the different companies approach the exclusion. Just something to read about in the future. And like I said, I'm going to stay away from this. I don't have the answers yet, but I've had a little bit of time lately, so I've definitely gone back and read all the forms. And so I know what the forms say. That's all I can tell you there. Now, what the courts do and the government, I don't know about that. But I will say, last thing I'll leave you with before we open this up for questions is I've been saying this lately, thinking about it, but I tell everybody to, stay healthy, stay positive, and stay focused. And I do appreciate your time today. So let's open this up for our questions now and see what we get. Oh, before we get into the questions too, on April 21st, we're going to do another webinar. We're going to really hammer in talking about we've already talked about the different construction classes, but now I'm going to really put the sell on you on how much better non-frame construction is. I mean, it's so much better from an insurance standpoint, from a longevity depreciation standpoint. So I'm going to talk about that in great detail. I think you'll find that interesting. And then we got some other things coming up in the future too. Really appreciate your time. So let's go ahead and get to the questions, see what you got.
All right, Jeff. Well, we don't have any questions that have come in just yet. So why don't we give everyone another 60 seconds or so in case they're typing them out.
They're all stunned, I think. Maybe that's it.
That's it.
My chocolate lab just came over to check things out. So.
All right, Jeff, first question. What is the average building cost per square foot that you're seeing?
That's funny. We were talking about that a couple of weeks ago too. It really is, and I'm going to sound like a politician now, guys, but it really is all over the place. You know, it depends on what the construction is. If it's frame, I've seen ground up new frame construction as low as under $100 in parts of the country, and I've seen it as high as $500, $600, $700 a square foot. Obviously, the areas that are most expensive, California, San Francisco area is crazy expensive. Parts of the Northeast are very, very expensive. Down here where I live, South Florida on the beach, very expensive. So it's really all over the place. But I would say I got a pretty good feel for it. So if you ever want to talk about it, if you have one, and give me a call. Ground up new is not too hard. When you start writing the existing structure and renovations, it's an older historical building. That's when we need to talk. So by all means, give me a call. We'll work it out, and we'll get the right value. We'll get agreed amount on there, and we'll be off and running. So hopefully that helps you out.
All right. So what are your guidelines with respect to distance to any body of water versus a true coastline?
Okay, so we have, specifically when you look at, say, Virginia to Texas, the coastline, the Southeast, we have mandatory wind guidelines, mandatory wind deductibles, and it does vary a little bit state to state. We'll take a look at different things. I'm a little more aggressive than some carriers simply because I've been doing this a long time. But if it's within 1,000 feet of what I call the true coastline, which is the beach, we're probably going to exclude wind and say it should be when it's eligible for the wind pool. There are areas, inland areas of the country where I play a little bit. Chesapeake Bay maybe might be an example of that. And as you move further north, you might have inland bays and rivers that I would write the wind on. So really, once again, I sound like a politician, but this is individual risk underwriting. You need to give us a call and we'll talk about it. I want to be careful, but yet, do the right thing. So hopefully that helps out.
Super. So you mentioned ground movement as an earthquake. So how about sinkholes? How do builders' risk policies typically respond to sinkhole activity?
All right. Well, our form's a little unique in the fact that we do not exclude sinkholes. So by definition, by not excluding it, we include it. And there are certain states that have certain guidelines where it has to be included or whatever. I don't want to get into each, state mandatory coverages, but we cover sinkhole. It is not an excluded form of, it says, I don't have the form in front of me, but earth move is excluded except for sinkhole. So we kind of, typical property insurance. I love that when they take something away and then they give it back, you just got to read the whole form. So, but the point is read the form you're selling. You're selling somebody else's form, don't assume it's all the same. And one thing we see in inland marine is a lot of proprietary wording. This virus stuff is starting to show people too. Not everybody's virus exclusion is the same. So, it's now time to start reading this stuff. It's definitely sinkhole is something that we've seen those on the news. They do happen. You want to make sure it's covered before the ground starts moving. Good little tip there.
All right. Now, when you write a builder's risk policy, do you have to keep endorsing it as more materials or more expensive materials are added to the building?
Got a couple different ways we can go with that. So what we write is called a completed value builder's risk, and it's probably 98% of the builder's risk in the United States is completed value, which means you determine what the completed value of the structure is, and that's what you write the policy for in the beginning. And you don't have a problem. As it's being built, there's full coverage. Now, we have something called change orders. Somebody decides they want a better countertop, they want better floors, they want a better roof, and the $1 million home becomes the $1.5 million home. So two different ways you can do that. First of all, you could call the underwriter and say, I need to make it $1.5 million now. So in completed value, they would do it, but they would go back to the beginning and charge the appropriate premium. Or if you wanted, you could add contract change endorsement, which automatically covers those additional up to a certain percent. Usually it's in increments of 10. So you get 10, 20, or 30%. And you can add the contract change in order and it'd be covered. Now you're going to pay the premium for that, but then you don't have to worry about the insured telling you about these change orders. It's automatically covered. So we see that on a lot of our forms, a lot of our policies now. People choose to have contract change order included.
All right. So back to flood insurance, would you recommend flood insurance for all commercial buildings in Santa Monica, California?
Well, that's a very specific question. So I will say flood is a little unique in the way that, the way that the flood zones are put together. You could have a building on one side of the street that's in flood zone, whatever, and across the street, it could be a different flood zone, simply across the street. And so you really have to look at each individual project. Because even in an area like there could be, 3 or 4 different zones within the same city. So, I mean, I guess the question is, let's determine what the zone is first. And then, like I told you earlier, some of these things that have never been flooded, we're seeing 1 in 500 year floods happening on a regular basis. So just because the lending institution doesn't require it, or even the specs on the, if it's a municipal building and there's no specs for flood, I would probably offer it. I would always offer it. I think that's the best advice.
All right, here's a more broad question. So can you kind of explain how your product compares to some of our competitors?
Yeah, we have another couple hours to talk about this. We covered on it a little bit on it today too. I think our form, we have 19 automatic coverages built in, and most of our competitors have less than that. I've seen 12, 13, 14 automatic coverages. So we simply have more coverages built in. When you look at our automatic coverages too, our sublimits, the included sublimits are very high. We include $500,000 in transit, $500,000 in temporary storage at no additional cost. We include $100,000 of soft costs automatically. These are all things, as you add them up, that make us a lot different. So we fashion ourselves as one of, if not the best, coverage forms in the business today. Myself and my team's been doing this a long time. So, the way certain companies do debris removal, we do it differently. Water intrusions automatically included. We don't include it for extra. So just off the top of my head, I'm giving you a few ideas, but we're very proud of our form. And as always, if you have one out there, you're competing against somebody, give me a call. I don't want to talk about any other individual competitor today on this, but I would gladly do a form comparison, and I think you'll find we do very, very well against anybody that's out there. Good question.
All right. Now, do you write policies for flipping homes?
All right, so I don't like the word flipping homes. So yeah, I'm an underwriter. You got to come up with something. Do you like to write policies for homes that are going to be fixed up and sold quickly? How's that? Sounds better. What we're going to say is, we are a course of construction coverage form, which means we don't want someone to buy a house and just paint it and resell it. So we're going to take a look at the difference, the existing structure value and the renovations we're insuring to make sure that it is a construction project. So it just kind of depends. Once again, I sound like a politician. We don't have a hard and set rule. Some companies say if the renovations are less than 10% of the value of the existing structure, they don't want to do it. We don't say that. We don't have that guideline. We're just going to talk to you. If they're gonna go in and do new flooring, new paint, fix up the windows, even if they can do that pretty quickly, that would be okay. So I guess it just depends. Good question.
All right. Do you have a guide that shows the automatic coverages that you include in your form, Jeff?
Yeah, we have some stuff on our website. If you, Darcy, do you have our website, the main website? I should have that up. But if you go to, Victor Insurance, our main website, and click on product, you can go to Builder's Risk, click on Builder's Risk. We have a highlight sheet that lists all our highlights. You can even get a copy of the policy, and our supplemental deck lists all 19 coverages. So there's materials on the website. So I strongly encourage you to go there. And like I said, give us a call anytime, send me an email. I'm kind of a geeky guy when it comes to this. I love talking coverage. And I'd rather talk coverage now than when the hurricane's bearing down on your insured, right? So that's the whole point of this webinar today. Let's talk about it now.
All right, next question. Let's do one more after this one too.
Okay.
If an investor is renovating a property, what is the shortest policy term available?
All right, we like to do 3 months. I don't really want to get inside of 3 months. There's just not enough premium in it because that's how we rate it, and so a lot of 3-month policies, we have a $400 minimum premium, and at some point it's just not enough premium for the exposure. So I would say 3 months is a minimum unless there's something special.
All right, so last question, if you can answer this. How are you handling builder's risk in the current environment?
So I will say, I guess everybody being shut down and things happening, and we're actually still seeing construction activity in most states. I'm a little concerned Michigan shut it down, but most states they're still, I can tell you, I'm looking out my window in Florida and there's people putting roofs on, and construction is still going on. We're still getting new business submissions. Not as many as we were before, but we're still getting them. We're still getting some commercial buildings that are starting and being built. So, it's as much as we could say it's business as usual. The carriers have stopped doing direct notice of cancellation for non-pay for a while. Each state is different. You'll see some that have expanded that, and we follow whatever state guidelines they are. So, as best as we can do for now, it's business as usual. If something is starting, we want to ride it. I will say we're seeing especially some of our bigger projects that are extending. Maybe they were close to being finished, and now they were close to being finished, and now because of this, they're delayed. So just make sure we get that extension in. We will gladly extend it for you. We don't want anything to expire now, just to keep it clean. So we'll be probably a little more lenient on the extensions. But other than that, whatever you got, we'd love to take a look at it.
All right, Jeff, do you have time for one more last minute question that just came in?
Okay, sure.
Just kind of a specific one. So if there's a client doing commercial TIV 3 to 6 months under $750K, can you do a quick rate and bind online, or does it have to be a fully underwritten policy?
Well, I'm an underwriter, so I'm going to say, we underwrite everything, but we do have quote, bind, and issue on our website. We're working on a new website too, and that'll be a webinar coming up that's going to be really, really slick, less questions, easier user experience. But, we want to make this as easy and painless, and the lower valued ones, we want it to flow. We don't want to underwrite it to death. If it's a renovation, I don't know if the question was ground up new renovation, we do take a look at it, and we do something like we might even Google the address just to make sure that the building is structurally sound. We get some rather interesting submissions. That's all I'll say about that. But we'll get back to you very, very quickly. And, we understand that the builder's risk is very timely. Sometimes you find out the closing's at 1 o'clock, and you find out at 10 o'clock, so you need a policy right away, and we'll get it to you. So we're here to make it as easy as possible. We have an 800 number. Call that. And even in today, when we're all working out our homes, when you call the 800 number, it rings all the laptops on our team. So we are very, very responsive. You can send us an email. We're definitely very responsive on emails. Whatever questions you have, by all means, go to the website, enter the data there. That will help us out a lot too. Like I said, stay tuned for our new website coming in the near future. Good question.
Thanks, Jeff. That's all the questions we have.
All right, guys, if you have more questions, they can send them in and I'll answer them privately, right? One-on-one. So, but I do appreciate your time today, guys, and look forward to the next webinar. And like I said, stay safe, stay focused, stay positive. See you all later.